Sure. Here is a 1,500-word version of your content rewritten for in recent months. The foreign exchange market in Iraq has been experiencing a noticeable shift, one that has caught the attention of economists, financial analysts, business owners, and ordinary citizens alike. The US dollar, which for a long time maintained a strong position in the parallel market compared to the Iraqi dinar, has been on a steady and continuous downward trajectory. This isn't just a brief fluctuation or a random trend, it's a development that has been unfolding gradually and consistently, showing a clear pattern that began at the start of the first quarter of the year. The magnitude of this shift is significant. Since the beginning of the year, the dollar has dropped by approximately 16% against the Iraqi dinar in the parallel market. That's not a small dip. For those who closely monitor currency movements, this type of decline signals more than just temporary market noise. It suggests structural changes at play, and in this case, those changes have been largely attributed to a strategic realignment in monetary policy by Iraq's central banking authority. To understand why this is happening, we have to take a step back and look at the broader picture. The Central Bank of Iraq has implemented a series of reforms and shifts in its foreign exchange policy. These are not surface-level adjustments but deep structural changes that have targeted the mechanisms through which foreign currency is distributed and traded within the country. These measures have effectively curtailed many of the inefficiencies and loopholes that previously allowed for significant discrepancies between the official exchange rate and the rate observed in the parallel or black market. One of the most notable moves made by the central bank was tightening the regulation and monitoring of dollar sales. In the past, large sums of U.S. currency flowed into the parallel market through unofficial channels. These dollars often came from the central bank's daily auctions, intended to stabilize the local currency and support legitimate import activities. However, due to lax oversight, some of that currency ended up being diverted into the black market or used for speculative purposes. This not only created a distortion in the exchange rate but also made it harder to maintain economic stability. The central bank responded by putting stricter conditions on who can buy dollars, why they can buy them, and how those transactions are processed. This included a more rigorous verification process for traders and businesses requesting dollars for import operations. If a company wanted to exchange dinars for dollars to import goods, it now had to present detailed documentation, including invoices, contracts, and proof of the actual need for foreign currency. This reduced the ability of traders to misuse or speculate on the dollar, essentially squeezing out many of the middlemen and unofficial players who had previously thrived on arbitrage opportunities in the parallel market. At the same time, the central bank introduced electronic platforms to track and regulate foreign exchange transactions more transparently. These platforms have allowed the authorities to monitor the flow of dollars more effectively, reducing fraud and curbing currency smuggling. The increased digitization has not only improved the efficiency of the exchange process but has also added an extra layer of security and oversight that discourages manipulation and speculative trading. These measures have had a twofold effect. First, they reduced the artificial demand for dollars in the parallel market by limiting access for non-essential or fraudulent transactions. Second, they increased confidence in the official market mechanisms, encouraging more businesses and individuals to transact through legal and regulated channels. As a result, the pressure on the parallel market has eased considerably, leading to a gradual yet consistent decline in the dollar's value in that space. Moreover, the central bank's new policies have been supported by broader governmental initiatives aimed at enhancing financial discipline and cracking down on corruption. For example, law enforcement agencies have stepped up efforts to track illegal currency exchanges and money laundering operations. There have also been high-profile investigations into financial misconduct, some of which have led to arrests and legal actions. These moves have sent a strong message that the old ways of operating in the shadows of the economy are no longer being tolerated. Another critical factor influencing the exchange rate is Iraq's increasing reliance on direct trade settlements in currencies other than the US dollar. In recent times, Iraq has been exploring the use of regional currencies, such as the Chinese yuan and the UAE dirham, to settle trade payments, especially with countries in Asia and the Middle East. By reducing the dependency on the dollar for international trade, Iraq is essentially diversifying its foreign currency needs. This policy shift, which is aligned with global trends toward the dollarization, has contributed to a decrease in demand for dollars in the local market. In parallel with these institutional changes, public sentiment is also shifting. Ordinary Iraqis, who for years saw the dollar as a stable and safe alternative to the dinar, are now beginning to reconsider. With the dinar gaining strength and the government taking visible steps to improve financial transparency and macroeconomic stability, trust in the local currency is slowly being restored. This psychological shift should not be underestimated because currency value is, to a significant extent, driven by public perception and confidence. Remittances and foreign aid also play a role in this dynamic. Iraq receives a fair share of inflows from international sources, and with stricter monitoring and control over how these funds are distributed and exchanged, there's been a better alignment between supply and demand in the official markets. The smoother this flow becomes, the less incentive there is for traders to operate outside of the official channels, which in turn continues to put downward pressure on the parallel market rate of the dollar. All these factors of policy reforms, stricter oversight, technological improvements, shifting trade practices, and changing public sentiment have come together to create a perfect storm for the dollar's decline in Iraq's parallel market. What's remarkable about this decline is its consistency and stability. It hasn't happened in sharp, volatile swings but rather through a measured and deliberate pattern. This is important because it signals that the changes are not just temporary or reactive, but rather the result of a long-term vision and a systemic restructuring of the financial ecosystem. There are still challenges, of course. The Iraqi economy is heavily reliant on oil revenues, and fluctuations in global oil prices can always introduce new uncertainties. There are also geopolitical factors that can influence the currency markets in unexpected ways. However, for the time being, the outlook appears more stable than it has in recent years, thanks largely to the central bank's proactive and disciplined approach to managing the foreign exchange landscape. In conclusion, the downward trend of the dollar in the parallel market in Iraq is not an isolated phenomenon, nor is it the result of short-term speculation. It is the product of deliberate, carefully executed changes in the country's monetary and foreign exchange policies. The Central Bank of Iraq has taken firm steps to restore control over the currency market, close loopholes, and strengthen the role of the dinar. By introducing transparency, regulation, and accountability, the bank has effectively reined in the chaos that once characterized the black market. This strategy is now showing real and measurable results. The 16% decline in the dollar's parallel market value is a clear indicator that the system is rebalancing itself. If these reforms continue and the political and economic environment remains stable, we may see the gap between the official and parallel rates narrow even further. And for Iraqis, that means greater economic confidence, improved financial security, and a more predictable environment for trade and investment. It's a positive development, and one that deserves close attention as the country continues to rebuild and reshape its financial future. If you found this breakdown helpful and want to stay informed about more economic insights and financial updates from Iraq and the region, don't forget to like this video, subscribe to the channel, and hit the bell icon so you never miss an update. Thanks for watching, and we'll see you in the next video.